Greetings. We're going to talk about ARC, and maybe most of you already went yesterday to the presentation of Steve Aruz about ARC. That presentation was more technical, so I'm sure you get all the nitty-gritty details there yesterday. Today will be a bit different. Will be more on a financial side, I think. So very quickly, just about me, I think it's relevant. Born as a software engineer, especially in distributed system. I'm more kind of a product guy in the recent years. My, let's say, distributed system, but the centralized story is I put one of the first ATM in Bitcoin ATM in Italy back in 2013. In 2017, I co-founded Vulpem. And I think in the last 3 years, I've been working with Bitcoin covenants in production on Liquid. Two of projects mainly we've been focused, I think, are relevant in a covenants conference. One is Fuji, which is using a covenant to issue, redeem, and liquidate Bitcoin-backed stablecoin. And also Banco, which is a way to do atomic swap in a non-interactive way, which is a very nice property, which means you have a QR code address, you send your Bitcoin, you get maybe Tether or whatever back, which is very useful even for kind of non-interactive pay joining on Bitcoin, even if we don't assume we are interested about trading. So I want to start first with some context before getting to my, let's say, to the point. First, as we know, Bitcoin block space is scarce and will always be even more scarce if we think about Bitcoin as one of the few remaining bearer asset, is a bearer digital cash. And as we see, and we are seeing nowadays, in these days, like the war against cash is ramping up. And in general, even all the major central banks are thinking or are really working on central bank digital currency. This is a problem, but on the other side is a very interesting for Bitcoin because it seems to be the solution for this. And if I look forward, I don't see any other option. So I think the Bitcoin block space will always be scarce, regardless if there are JPEG or not. But in general, like the true case for Bitcoin will be even more needed going forward. The other topic I want to introduce is the fact that, there is not really a way to generate, let's say, a yield on top of your Bitcoin in the sense that is sovereign, in the sense that you keep your keys, in the sense that you are not giving to a custodian your Bitcoin. Sure, maybe running Lightning routing node is one of those. At the same time, it's not so fire and forget. Like I may have capital, but I also need to become a Lightning network expert. I need to know how to rebalance channel, et cetera, et cetera. So it's still one of the ways, but we don't have many other ways to do that in a non-custodial way. I mentioned this because I think Bitcoin fixed the problem of savings already. Cold storage is amazing. I just throw Bitcoin cold storage. I wake up in 10 years and are still there. Amazing. But at the same time, we should not be not think about that financial services will go away, will be here. So lending, derivatives, and other things will be actually here. And as we said before, Bitcoin block space will be scarce. So most of the population, most of the people in the future will use Bitcoin, not because they believe like we are, but because they will be forced to use it. There will be no other option. And mostly they will not use Bitcoin like we are using nowadays. They will use a synthetic version of that. And that sounds like a derivative of Bitcoin. So now I right to my point. I think this problem and this opportunity, I think ARC seems very interesting protocol there. And just to step back, in case you never heard about ARC or you didn't went to the Steve Aruz talk yesterday, if I really want to edify, like I really want to explain, like I'm five, I think what ARC is there is this bank. You go to the bank, you deposit your Bitcoin. They will give you a check. This check has an expiration time. So you need to either redeem it or spend it again to someone else before the expiration. And of course, the interesting part of this bank is that whatever the bank will go away or will cease to exist or will not cooperate with you, you can always unilaterally exit, which is a very nice, interesting property. So we can start having this concept where you have this like trustless banks going around that serve maybe especially mobile commerce or and the last mile use case of Bitcoin that will be always more important when we are thinking about digital cash. So this is just a tool on the R. And I think here the interesting part of Arc, and this is my step back, like everybody's thinking or talking about Arc from a user perspective or from the implementation detail perspective, but I think it's also interesting to see from first principle what it really is. And you have on the left, right? So you have these plebs, right? These people that they cannot afford a UTXO. They will never be able to afford a UTXO like we can now. And they need to borrow. They need to borrow block space. There is no other ways. And in Arc, there is this concept of virtual transaction output. And I think that what they're really doing they're like paying a rent to someone else, which maybe came before them, and they are maybe rich of UTXO, of actual Bitcoin on the first layer. So there's this guy on the right with this hat, a classic capitalist. So the capitalist there on the right is rich of UTXO, and as we said, like he wants to get some yield on top of his own non-custodial holding. So what he can do is like basically is lending really UTXO space to a bunch of people on the left. So I think this is really like how I see it from from an high level perspective, and I think it's very interesting because he's giving what we don't have now, which is our horizontal scaling. Like especially in computer science, like usually you can scale a lot like vertically, and Lightning is very good at that. Lightning can scale you vertically, but at the same time, if you really want to, in a single UTXO, you want to put many people, well, we don't really have an option now, or at least not a viable option to do it. And Arc is kind of an opinionated way to do that. And I think this is how I say it. Going a little bit forward on that, like, it's true, there are these capitalists, right, that they are rich of UTXO, but they don't really, maybe they are not really tech savvy, they don't know how to run a server. And the interesting part is like, and also, if you were yesterday at the presentation, an ASP, an Arc service provider, does two things. One coordinates around, and on the other provides liquidity. This is a very opinionated way of how has been like presented Arc, but I really think that actually in the reality, there should be a segregation there. Like if you're very good in being connected, like be co-located in the best data center of the world, to be close to your user, well, that's to me sounds a coordinator, but it may not be rich of UTXO. It may just be a very good sys administrator. And I really think that in the end, like if you think like you can separate the roles. So you can have like people running a fire and forget piece of software on the other side that is just every time looking at new offer for new loans, because that's what a VTXO is a loan. And they will say, yes, I will cosign. These people on the right that are running this, always on automated wallet server, they basically don't even care about rounds. They don't even care about storage or Arc in general. They just know that in 14 days, 1 month, they're getting back their principal, and they're getting also some fees. This, to me, sounds lending. So what's the business model of this? I think this is since the first bank popped out in Venice or Florence, I don't remember. I think in the end, it's a very simple business model lending in the end. No? Like you go on a side, you try to borrow long-term, a very low interest rate, right? And the other side, you're trying to reselling to short-term in maybe medium interest rates, right? And that's what VTXO is. It's a very short-term loan. And you know that in 14 days, you're getting back your principal. And the other side, this, let's say, capitalists actually may want to do also custodial lending also on their side, because at that point, yes, you may be very early in Bitcoin, but you will finish your UTXO. So there should be somehow some lender of last resort. And I think maybe if you get crazy covenants, I have some ideas, but I think it's not the right moment. Maybe you can do some sort of lending under collateralized on chain. But at the same time, I think this lender of big resort, they will, do the one of the oldest job of the world, right? So they will just be a lender, and they will just trust, and they will just have a relationship with this always-on wallet server. Of course, you're saying, "Oh, wow, this is amazing! No, this is done. So what we're waiting for?" Now, of course, there are challenges. There is no marketing pitch here. This is just my understanding and how I see Arc. And yeah, like the first like lender, again, like in the same way, like routing nodes may have capital, may have Bitcoin, but they don't really know how to run server. So I think this is one of the challenges. So how we can make it really, fire and forget. You send to an address because you're rich of Bitcoin, but you don't really want to manage infrastructure. So that's definitely something that needs a lot more thinking and validation in the market. The other part, yesterday we were thinking, about what really is, like how an ARC work. But I think in general, like from the user perspective, like we know, for example, in Lightning, how much you're going to pay your fees is a percentage, right? Which is charged by the node. In Bitcoin, is not about the volume, not about the amount, it's about like how much the transaction weight. And I think in ARC is yet another way, and I think is a function of, the idle capacity that is still there as lender of last resort, and also the cost of actually borrowing Bitcoin. And why I'm saying this is like, imagine there are just 10 Bitcoin as idle capacity in the ARC, and someone want to do 5 Bitcoin ARC payment. Well, that fee is basically consuming 50% of the idle capacity. That should cost really, really a lot. And the cost of the fee should disincentivize. So this is a different mechanics. So of course, for end user, they will need to understand that the cost of making an ARC payment will not depend on themselves, but will really depend on the liquidity and is not under their control. But there is also, I think, an opportunity here, kind of, in this challenge, in the sense that now we have an interest rate. We can do lending, right, in the broader crypto space, but we borrow Tether and use Bitcoin as a collateral. So the interest rate there is the dollar interest rate. It's not the Bitcoin interest rate. So I think actually ARC is kind of could be a way to have price discovery in the sense that it can like show what is the cost of borrowing Bitcoin. And I think this is a kind of opportunity it can be, because for everybody will say, why am in a future where we are hyper Bitcoinized and everybody's using Bitcoin every day, they will say, why am lending to you Bitcoin when I can make more money in providing to this ASP, for example. So that will create some sort of price discovery there, and ideally can be an oracle for the Bitcoin interest rate that nowadays doesn't exist. Nobody really is borrowing or lending Bitcoin. As I said, sure, reliability of these off-chain pools will not be super easy. Like, of course, economy of scale, if you're a single server that both coordinates and also provide UTXO, well, for sure that would be super easy to implement and easy, right? But at the same time, it's nice to have separation of concern for many other reasons that are not only technical. So definitely this is something that should be looked upon. And here maybe I'm putting there, maybe Fedimint is fixing this in the sense that why not? These lender don't form sort of cooperative. If you were in crypto, they would say, oh, we're doing a DAO. But yeah, I think it's in the end, it's just a glorified multisig in the end. And I think Fedimint can be a nice solution there to helping this lender to form an off-chain pool. And okay, this is the last point. It's very provocative. Maybe some ARC will say, hey, we are doing fractional reserve in the sense that, yeah, like we are not backing you 1-1. We are backing 80%, which is much better than the dollar, right? We have 0% backing or the euro, whatever. But still, like there will be an agreement, and maybe my cost of transaction will be less. The caveat will be if I need to unilateral exit, if I have, nominal value of 1 BTC, I will get 0.8 BTC, which is scary as a Bitcoiner. But, this is something that we should have as a challenge, and we should also put it there that can happen. And that ARC, that ASP will really charge less than the others. Of course, I'm a messenger, don't shoot me. But this is definitely something that people can do, is open software, and user may decide if they value more 1-1 backing or maybe a little bit less, but we want to pay less fees. So this is to be seen. Okay, so show me the contracts, right? It's a Conan's conference. So we have on this GitHub, we have this repo called TypeScript. We are using Elements introspection of codes, mostly because we really wanted to not be, to pick one Covenant proposal to how to build ARC. So I think having a something that is production live, you can experiment, and is very flexible with introspection of code. So you can really push the boundaries. And in general, Arc, there is no spec, right? So I think that we're still really in an exploration phase. So yeah, you can definitely scan it. There is miniscript definition and also the opcodes for the 4 paths, basically, that the contracting primitives that are needed to implement Arc nowadays. But when Arc, when we can try Arc, I think there are people already that reach out to me, and I did some Arc payments. You can scan in this QR code. There is a progressive web app live now, Liquid, so you can scan it, you download it, it's just a classic, Bitcoin wallet, no? You have 12 words, and come to me, and after this, and I would really love to send you some BTXO and try it together. Thank you. Yep. Yes, sorry, say it again. Speak. Yep. Yeah, it's interesting because, yeah, again, this is my interpretation. So the thing is that what you're really doing when you have a VTXO with an expiration time, you're renting block space in practice. So you're really saying, I'm paying you a fee now for the liquidity that the ASP is locking for me. And to me, sounds alone, because in the end, he's getting the principal back after the 14 days plus the fee. And in general, you're not owning a UTXO. Yes, you can own it with a unilateral exit, but unilateral exit is there just for having trust in the SP that the incentive are right to be live and not to screw you, right? Because in the end, you can always exit, but that should not be, the case, ideally, there should be always a long-running ASP. And of course, also the implementation matters. What I'm trying to say with this, let's say, off-chain lightning pool is just looking that in the back, you don't have a single party, but you have multiple parties you need to coordinate there. They're doing actual coin join, on-chain to have multiple UTXO, which is more, I'll say, you still use more block space, right? But I think overall, it's a good compromise to making sure you can have multiple liquidity providers coming together. I hope you did answer. Thank you.